Hey, Mark.
Morning.
What's up, everybody?
Hey, good morning.
Morning for you.
Morning.
Good morning. Good morning.
Afternoon.
Hey, Frank. How you doing, brother?
Okay.
Good, good. Y'all are here to listen about velocity today?
Ready? I
What's
just want to say, John, your call Monday was very inviting. So I told you I was out for a mental hike, but I stayed on the call the whole time while I did my hike.
Oh, right on, right on. Instead of listening to nature, you listen to us, gab about whatever.
I did. It was good though. So I could get in my exercise and learn at the same time.
Yep, right on. That's great. Yeah, I normally put something on. For me, it's the Bible when I go for jogs. So.
Good for you.
Alrighty. Okay, guys, let's get started. If anybody else is going to join, I might have to pause in between, but it's all good. So not everyone here has placed loans with Velocity, but a lot of you guys have. Justin is just about an expert with Velocity, and we can talk about some of the fundings you've been doing, brother. But yeah, this is the money I rep, and it's pretty friggin' good. People don't like the rates, but if you consider the type of underwriting we're doing, guys, it's a really, really solid product. So, all right, I'm gonna share my screen with everybody. All righty, can you guys see my screen? I can't hear anybody. Yes, thumbs up.
Yes.
All right, perfect. You see my face and all that.
You see that?
Great.
Oh,
Great. All right. Well, as you guys know, I rep Velocity Money. We're a wholesale lender. You guys already have my contact information, but if you want to send me a deal at Velocity, there's new finance, which is one aspect of what we do here, which is just brokering and helping you guys grow your brokerages. And then there's Velocity deals. If you want to send me a deal at Velocity, you have to take this email address down. I don't take Velocity inquiries through my new finance email. So it's got to go through here. So if you don't already have the email, just take it down. All right. So just from a high level overview, guys, Velocity is a wholesale lender. So key point, wholesale private money lender. There aren't very many wholesale private money lenders. Most of the private money lenders like to lend directly to their investors, and then they like to also take on commercial broker business as well. The problem with that is they cannibalize their broker's business. So by being direct to consumer and taking on broker clients, that's a problem. Like, for example, Kiavi is heavily invested in marketing direct to consumer. And then when we take a deal to Kiavi, it's kind of like a one-hit quit right there. They know who Kiavi is, they know the pricing, they can just go around us whenever they want. So that's a conflict of interest. So a lot of private money lenders, a lot of conflict of interest. However, Velocity is a true wholesale lender on the commercial side. We literally don't take clients on unless they come through a brokerage. So if a borrower calls me direct at Velocity, I tell them that, hey, we're a wholesale lender. In order to put a loan through us, it must come through a brokerage. And that's when I either refer the deal to one of my top producing brokers, like one of you guys, and then I just ask for some sort of split, or I have my brokerage run the deal through one of my loan officers that I've hired. So that's how I operate my business with Velocity. Moving on, we do investment and commercial properties, and I will get into that further on in the presentation. We also do small balance loans. That's our niche, 5 million and under, and we'll talk a little bit more about that as well. And then we are truly probably the most simple underwrite you will encounter if you want a 30-year mortgage. So if you want a perm loan, Velocity is hands down the simplest underwrite, the easiest to get through. As long as your collateral is good and meets our criteria, which we'll talk about, we are the simplest underwrite. All right, so let's get into what wholesale lending really looks like with us. I already expressed it. When we get deals, it has to come through a brokerage, but basically velocity simply represents the money on the back end. So I have a lot of brokers, guys, who like to call us their in-house lender. And the reason why is because we truly just do the back end work. We don't do any consumer facing stuff. We don't even like talking to title companies or insurance companies. All that falls on the brokers. So like you guys truly are the face of our company. All we're doing is we're giving you thumbs up on collateral, thumbs up on conditions as they come through, and we fund the loan. We literally represent just the money. So I like to set everybody up as a table funder with us, because at the end of the day, we're not doing any consumer facing work. Why should our name be on the paperwork? It should be you guys that show as the funder here, because you guys are doing all the front end work on these deals. So that's you guys, the face of the company. You guys originate the loans. You sell the loan. We do not overcome objections with the borrowers. We don't overcome issues with title and insurance. You guys are the ones that are working out the issues. We are identifying issues and we're giving you guidelines, but you work it out between your people. And I like for you guys to show as the lender. So it's true white labeling from start to close. So we have other lenders like Easy Street, RCN, who will white label the term sheet on the front end. However, on the back end, everything says RCN, everything says Easy Street, Kiavi, like it's all revealed. Velocity is not revealed from start to close, from in title, term sheet, on title, on insurance, all the way to the HUD. You show as the lender of record. Okay, so that's like a huge selling point, just doesn't exist for most of these private money lenders. They like to say they table fund, but they really don't. We're one of the true, like, fully table fund from start to close. And it doesn't require any more responsibility from you. It doesn't require a track record from you. I don't need to see that you funded 100 deals. I don't need to see, we don't need to see reserves. You're not funding the deal. It's our money. There's no additional responsibility on you. You don't track payments. Everything is done through us. Any questions on that? All right, moving on. All right, how you guys get paid? You guys can charge up to 5 points. We are not a lender that says if you charge 2, we're going to charge 2. We don't do that garbage. We actually don't charge any points on our loans, on our bread and butter product, our perm product, 0 points. So no points origination. You charge up to 5. Right now, we're offering 1 point yield spread as well. So if you bump the rate up by 0.5%, you're going to get a full point on the yield spread. And that yield spread is paid up front at closing. So, you don't have to wait around for the payoff. Property type. So we do all categories. So the reason why I like to call Velocity like a really strong foundational lender, if you're running a private money loan brokerage, is because we hit all property categories. So single families, multifamily, and commercial. So we are a strong foundational lender. And we'll get into other reasons why we're a strong foundational lender as well. But 1 to 4 investment properties is the first category. That's just anything that's residential investment at the end. That's what it is. Okay, so single family, duplex, triplex, condos, no condo hotels, and we'll talk about that. No primary residence, got to be an investment property. Multifamily, so we do multifamily and mixed use. There are no requirements on the percentage of residential versus commercial. So that's where we kind of excel compared to these other DSCR lenders. They like to see like 50% or 51% residential, or only 25% commercial sometimes. We don't care. It could be mostly commercial, 1 residential, little studio at the top, and we'll call it a mixed use. You get better pricing on mixed use than you do on straight up commercial deals. And then also we're lending on commercial. So office, retail, warehouse, auto repair. So this is one big reason why we're a very strong foundational lender for you if you're running a private money brokerage. We're table funding, true table funding, start to close. We hit all category types, and then we do a simple underwrite as well, and we'll get into that as well. Any questions on our property types that I like to hit?
Just one. What if the sponsor is a nonprofit?
We don't care.
Really? Okay.
Yep, we require a guarantor. So there has to be a personal guarantee. So the sponsor is really our guarantor. However, if they are buying and they're going to be titling in an entity's name and it's a nonprofit, I don't care. The problem with nonprofits, though, is you run into a board of directors, 5 board of directors, and it's difficult to find someone to actually guarantee that loan. I run into the same issue with very large firms, big investment firms. Nobody wants to flip the bill on the credit.
Well, no, I'm
So-
talking like a daycare or
Yeah.
a small
Yeah.
vocational school that just
Perfect.
happen to have a
Yeah.
501c3.
Yes.
Okay,
Yeah.
thank you.
That leads me into actually our next point. So a few of our niche assets. So I just mentioned to you the categories. So we hit all 3 categories: single family, multifamily, mixed use, and commercial. Now diving into our niche assets, what we do the best, I would say 1 to 4 investment properties accounts for 75% of our originations, and we originate, 100 million a month. So actually over 100 million a month right now. So this is 75% of our business. The other 25 is the commercial side. Now, niche assets where we excel compared to a lot of other guys. Of course, we do Airbnbs. We don't require like 6 months of Airbnb this, Airbnb that. It's just if it's an Airbnb rental, that's fine. We can refi, we could purchase, doesn't matter. No seasoning requirements. Sober living houses are okay for us, and assisted living. So these are ones that are rejected often on the single family side, but we will take them on. We also are cool with daycares. So you mentioned daycare, Mark. So single family operating as a daycare is totally cool. Multifamily mixed use niche assets. Again, I mentioned earlier, no residential percentage occupancy requirement. Doesn't matter to us. And then finally, commercial, self-storage, office, retail, warehouse, and daycare is okay on commercial. Auto repair is okay. And we're going to get into what we don't like here in a little bit. But the key factor on what we don't like when it comes to the asset type is really going to be focused on commercial. So if I run into a commercial property that is special use in nature, like a restaurant, standalone restaurant, church buildings, you mentioned 503c, but if it's a church building, that's a special use asset, and we don't like those. So we'll talk about those later on as well. And then
Detention
one key
center?
factor I want to let you guys know about is the multifamilies that are renting out as Airbnbs. So you get a lot of guys who want to buy, they buy the multifamily, they rent the whole thing out at Airbnb. And so now it's operating as a hotel, essentially. When you're running a, 20 unit Airbnb, that is a hotel. We don't like that. We will not lend on that. There is a workaround there, though. And the workaround is if that person is smart with the Airbnb, business, what they would really do is just get 12-month leases on each unit, maybe to separate LLCs or individuals that own their company. That way we have a bunch of 12-month leases, and we don't care what the 12-month lease tenants are using the asset for. So if those 12-month lease tenants are using it to Airbnb and every single one is being Airbnb'd, we don't care as long as we have leases. Does that make sense? So that's one thing that you should be advising your guys on is, hey, if you plan on doing this, you need to get leases in place. Do some sort of blanket lease, whatever. Primary selling points with Velocity's loans. So we have a few key selling points that separate us, that make us the best. And number one, this is what makes us literally the best at no income or NINA loans or DSCR loans on the perm side, is we have no DSCR requirement. You guys have all probably heard me say that already, but this is a big point, especially right now where interest rates are right now. You're getting 8-9% a lot of the times on these perm loans. I know you can get 7 sometimes, but mostly it's 8-9% on the perm side. We have no DSCR requirement. So when you have a very high value property, the leases aren't really covering the debt service at 0.8 or 1 or 1.2. We have no debt service requirement. So this is like the key factor when we're talking about loan amounts. When someone's trying to pull a lot of cash out, like 75% cash out, and they're not debt servicing yet because their lease they haven't updated their lease to increase rents. They come to Velocity to get that cash out of a $3 million property that would not debt service at RCN or these other, you know, DSCR lenders, right? And I mentioned RCN just because like they're just the big one. So that's the key factor, okay? And we'll talk about that. Justin, I think you threw 2 in there today that probably won't debt service anywhere else. $3.8 million loan amounts. Like the purpose is to come to us, get your cash, minimal hangups, refinance in a year or 2. Not a big deal. No payment reserve requirements most of the time. So what I mean by payment reserve requirements is if we're doing a refinance or purchase, a lot of these lenders want to see 6 months reserves. We do not require reserves. Okay, this is a huge hang up for a lot of investors. They're pulling cash out of their property because they don't have cash. They need some money, man. They don't have reserves, you know, they're trying to get cash. They're going to use that cash to make payments anyways, right? We don't have reserve requirements. This is a big deal. Source of funds for down payment. A lot of lenders have this similar guideline. However, it is with us as well. We do not season source of funds for down payment. So it does not have to be in their bank account for 60 days. They could literally get a loan yesterday, a business loan. As long as it's in their account prior to closing, we're happy. I had a guy who was a foreign investor investing in America and Mexico money. And he just kept getting cash injections to meet our requirements. It was really funny. It was like, oh man, we need more. We need more. And he just kept getting more money from Mexico. And we don't ask any questions. Holdbacks. Holdbacks are available. So this is an example of, let's say we get a commercial property and the property has something wrong with the roof. Or maybe like the not landscape, I was going to say parking. Maybe the parking lot's kind of messed up. And we're going to say, hey, we'll lend you the money that you want. However, we're going to hold back some money to repair that, you know, sidewalk or the roof thing, right? So this is a big deal. Some lenders will just straight up reject the file because you got something messed up, or they'll want you to fix it first. Sometimes we'll ask them to fix it first, but a lot of times we'll do a holdback even on our perm loans. That's the point I'm trying to make. Say we get a perm loan, property's a little bit distressed. We'll say, hey, we'll hold back that money for you and we'll reimburse it later on after you get the fix done. No FICO score requirements. So you guys, if you're signed up with me, you've probably already seen the emails that we have no FICO score requirements at 50% LTV. And this person could be 1 day out of bankruptcy as well. Nobody's doing no FICO score requirements. This is a velocity thing only on perm loans. Nobody's doing a perm loan, no FICO requirement. That's velocity. Bring it to us. We'll give them a 30-year fixed. It will not have a short-term, you know, balloon payment that they have to worry about. These are clients that you normally go hard money, you know, 15% hard money on. Come to us. We'll give them the, you know, 9 to 13% depending on what property type. But 0 FICO score requirements. All right, that's a big deal. Minimal FICO score requirements. So we'll go up to 60% LTV if the FICO is 600, and then 650 plus gets you 70-75% LTV on our perm product. These are selling points, okay? I want you to lodge these in the back of your head. You know, if you're going to sell this product, which you should be choosing a few products to go out there and hammer people with. I mean, those are the key selling points with us. You'd be telling your borrower, oh yeah, I got a perfect fit for you. I'll do a perm loan. Your credit's 450. We'll go 50% for you. It's going to be great. All right, now let's talk about small balance, what that means. For us, it just means max loan amount, $5 million. We will go a little bit higher, not often. And we're just simply an investor's lender. Now, a lot of lenders have caps on what they give to borrowers. Okay, so like my top loan amount's $5 million, but I'm gonna say like, hey, I'm only gonna give this borrower $2 million worth of deals. You know, they have $2 million with us. We're not gonna go anymore. Velocity has no cap on how much a borrower decides to borrow from us. Okay, so a lot of times you'll run into that. You know, when you see those line of credit products, those fix and flip line of credit products, often what that actually is doing, it's limiting your borrower's ability to borrow from that bank. Often enough because they're saying, hey, you're capped at $2 million. Well, why would you cap someone? You know, you give them a fix and flip line of credit, they're allowed to draw, they're allowed to, you know, they don't draw, but they're allowed to do fix and flips up to $2 million. Basically, at the That's what they're doing. They actually end up capping that person. And if they want more than 2 million, they have to re-underwrite that person's net worth. Right here, there's no cap on how much we're willing to lend to this person. So they can borrow as much as they want. No caps, okay? Max loan amount 5 million per deal. We are capped at 2 million right now on single family assets. Okay, so 1 to 4 investment properties. We're capped at 2 million. However, we can get exceptions. So Justin just threw 2 in. I mentioned earlier, both of them are for 3.8 million for the same borrower. So that's, like I mentioned, no cap on how much we're giving to a borrower. However, the reason why we're able to go above our $2 million cap on single family is because we reduced the LTV to 60%. So we went 60%. So we're feeling a lot more comfortable giving a $4 million loan amount because we've reduced our LTV where it normally would be 70, 75. It's like, okay, we'll go over 2 million as long as we reduce our LTV and we have other exceptions. Justin, we might get a little bit messy later on, brother, because I don't know enough about the sponsor and my underwriter wants to see sponsor strength. So I got the exception to go 60 to 65, but she said it has to be a strong sponsor at the end of the day. And I haven't given her anything. So we might get stuck later on. We could try to push for those, strengthening factors prior to, but I just took your word for it,
I have a lot of info. He's strong.
All right. Thank you. All right, simple underwriting. So what does simple underwriting mean? You guys heard all the stuff already, all the key selling points, what makes us simple. But the key factor, no income, no asset, no tax verification. You could be bankruptcy recently, and as long as you're out of the BK, you're fine. We already went over this, but the point sending it to us instead of the other guys is just limited hangups. You will have much fewer hangups. You'll have a much easier close if you send it to Velocity. If you can sell a higher rate and sell it to Velocity, these loans close much more frequently than the other ones. I'll tell you that much. Fewer hangups. All right, now let's get into our products. So you're going to see, if you get my rate sheet, you'll see 4 products, okay, that we sell. Truly, we're really only selling 2 products. The other 2 are just iterations of these 2 products, okay? So I'm only going to talk about 2 products. When you see my rate sheet, I don't want you to get confused. I don't want you to think about, oh, should I just sell the Flex IO or the Flex Term? Just think long-term money, short-term money, and then just come talk to me and I'll line it out for you. So you don't have to figure out what our products are. All right, the first one's our fix and flip loan. We call it the ARV Pro. Rates are pretty darn good, if you ask me, on our fix and flip compared to a lot of the other guys. 10.74 to 11 1/4 right now, I believe. We will go up to 80% on purchase and up to 100% on the rehab, but we cap out at 80% loan to cost. Okay. So what I tell people is normally you're going to get 80 on purchase and 80 on rehab. Now, you guys, I know that's conservative because I run a brokerage shop too. We see 90, 100 from other guys. We're not the most aggressive fix and flip lender. However, where we do excel compared to the other guys is we will give fix and flip money on a much larger loan amount. A lot of guys cap at 2. We normally go above 2 on fix and flips to beat those other guys out. So we're really good at whale hunting on the fix and flip side. $75 to $5 million loan amount. $650 required. You got to own a primary or a rental if you want to do a fix and flip with us. And we're only doing 1 to 4s. We don't do any bridge loans for multifamily or commercial. So if someone comes to you with one of those, multifamily or commercial, it's just perm loans with Velocity. Okay, you're not sending me any bridge stuff. Now I can make my perm loan look like a bridge. So, if they want short-term money, we can make that work as long as it's cash flowing on the multifamily commercial side. But we're not giving a true bridge loan on that side. We're only doing bridge loans for rehab on the 1 to 4 investments. All right. The other one is our bread and butter, which is the one that I talk about all the time. We've been running this one since 2004. Really, really good product. It's our perm loan. We securitize these on the secondary market. We have a really healthy buying pool of secondary investors who like to purchase our notes in tranches. That's why we've lasted through 2008. We've lasted through each kind of economic issue because investors like velocity notes. Our default rates are super low and our returns are super high, our yields. So 30-year fixed rate mortgage, it's fully amortized. I can go interest only for the first 10 years if the borrower wants it. It increases the interest rate a little bit, but we can do it. There's no balloon payment on my interest only loan. So I used to have a couple of investors, you guys, that would come to me every single month. It's crazy. They would refinance their rentals. They'd have these rentals and they'd refinance, and we do hard money loans. And the only reason they did that is because it allowed for a better cash flow, because hard money loans are interest only. We could never get a perm product that was doing interest only. So we were just doing hard money loans. This was like 6 years ago. And so anyways, now this loan comes out. It's like, hell yeah, they would definitely take a perm loan like this because it has interest only payments. It allows for better cash flow. So just think cash flow here. All property types. So flex term loan hits everything. So 1 to 4s, multifamily, and commercial. Those are our LTVs. So when you get a commercial property, people tend to quote 75% for some reason for their commercial investors when they're thinking velocity. Then they come to me and I tell them, oh, it's actually 70. And then they tell me that the borrower doesn't own any commercial properties. And when someone doesn't have any experience, I have to reduce their LTV down to 5%. So they went from quoting the borrower 75% on a commercial purchase all the way down to 65%, which is terrible experience for the borrower because they were expecting to get 25% down and they got up at 35% down. So just remember, commercial 70%, mixed use, single family 75%, and these are for experienced investors. If you're inexperienced, you're always going to get a 5% LTV reduction. And that's not just with me. You talk to all the other lenders, they're going to say the same thing. First-time investors, people who are inexperienced in the category will almost every time get a 5% reduction. All right, rates vary per property type. So when I quote people, velocity product quotes on 1 to 4 investments, I always say 9 to 11% typically. Okay, I know it goes over 11, but typically I say 9 to 11% on multifamily, 10 to 12% on multifamily, and then 11 to 13% on commercial. So 9 to 11, 10 to 12, 11 to 13. And I know it goes over a little bit, but that's the only reason it goes over is if you have the lowest FICO and you're doing a refinance, it can be a little bit higher. And I normally set the expectations when I'm on the phone with the guys too. So that's it. As you can see, our rates are higher on the perm side, you guys, than other lenders. However, we are small balance. We're hitting a niche that nobody lends on. Nobody does small balance perm lending. It's very rare. All categories, no tax verification, everything said and done. We have a true niche in the multifamily and commercial side on this perm side. When you get to the single families, yes, you can place it to other lenders to get a better rate. However, the table funding kind of goes away eventually with those other guys, and the deal's not going to move as smoothly due to the debt service requirements from those other guys, where we do not have debt service. So I don't like to say we even compete with the other lenders because we just sell a different product. We sell a no debt service product. Okay, so I'm not competing with the debt service lenders on 1 to 4. All right, it's a different product. So I don't want you to come to me and say, "Oh, your rate's high. Screw you, John. I don't want to have anything to do with you. I could go get a DSCR loan, I say, go get the freaking DSCR loan then. Okay, go get the best thing for your client. I sell a different product on the 1 to 4 side. I sell a perm loan, no DSCR. The reason why someone takes this loan over a hard money loan, like a 12-month interest only, because they don't want to have to deal with another balloon payment in 6 to 12 months. They don't want to have to deal with high originations because the hard money lender is going to charge 2. You're going to charge 2. That's 4 points. I don't charge any points on this loan. Okay? So no balloon, no DSCR requirements. Shoot, I don't season. I don't even care if the property's vacant on a cash out refinance on a single family. All these things being said, you're going to have a much better experience here. And you won't have to put this person into a balloon payment loan, okay? So different product than the DSCR lenders. Just remember that. All right, any questions on the flex term loan, my bread and butter? Obviously, this one's close to my heart, right? Because I sell it. So. All righty, moving on. And we already know the FICO score requirements. Cheat sheet. Okay, so just thinking cheat sheet, what does Velocity like? We've gone over most of this stuff. We love 1 to 4 investments. Those are easy for us. We like heavy populated areas, so it has to be in an area where I can pull sales comps just like everybody else. So we're not a rural lender. You want rural loans, send it to Savannah over at CV3. You know, everybody else wants population. Commercial properties, I need them to be occupied unless it's going to be an owner moving into the subject. 1 to 4 investment properties, vacant, no cash flow. We're cool with that. I mentioned that earlier. So this is your cheat sheet. Auto repair, daycare, owner occupied commercial assets. We like them. A lot of other lenders do not. So that's your cheat sheet. This is like, what does Velocity like? When you hear any of these things, just think Velocity, send it to us. What we don't like, okay? So what are we not lending on? Rural areas. We don't lend where there's no sales comps, just like most everybody. Right now, commercial office buildings that are 5+, we're not really that interested in those right now. They just don't seem to be debt servicing. They're more of a higher risk asset. So office buildings, I still do office, small offices. Anything with more than 5 units, we're going to run into debt service issues most likely. We don't like mid rehab projects. So if you get a fix and flipper who wasn't able to finish the job and now they want you to come in and take out their old lender and give them more rehab money, we don't like those. We'll do them, but we don't like them. We cap them out at like 70% rate in term. So normally those guys are actually already over leveraged. So that's why, you know, we're super conservative on those. Commercial buildings over $1 million are not debt servicing right now. We have a debt service requirement of 1.25 on this, and it's just too heavy for these guys to handle based on our interest rate. So if you're going to send me a commercial mortgage loan, like straight up commercial asset, it's best just to give me those small balance ones around 500 to 750,000. I have no debt service requirement when I get to the really low loan amounts on commercial. So low loan amounts on commercial, we revert back to no DSCR. When I get into the higher balance commercial, that's when DSCR takes hold, and these just aren't doing well right now. Special use buildings, I mentioned that earlier. Standalone restaurants, gas stations, hotels, what else? Car washes, auto sales lots. These are special use. They require one type of tenant. The only special use style building that I'm really good at, I'm okay with, is auto repair. But everything else that's special use building, Velocity doesn't like. Funeral homes, I get a lot of funeral homes. We don't do them. All right. Any questions on my products, my cheat sheet? I've been talking for a while. Does anybody have any questions on anything that I've gone over so far? It's okay if you don't.
John, I chatted you. How about a youth detention center?
Is it a
I'll send it over.
Is it a single family house or is it a commercial house?
No,
building?
it's a commercial property.
Oh man, it's probably not going to work.
Okay, I won't waste your time. I do have
We
a
can look
commercial
at-
building in Cleveland. I just need to make sure it's still available.
If there's overnight stays taking place in a commercial building, we do not lend on those.
Okay.
So like senior living zoned commercially is a no-go for us. Senior living in a single family house is good. So if your detention center was in a single family house, we'd probably be okay with it.
No,
But the commercial
this is a
side,
building-
we can't have people living there.
This is a building like a small jail. Okay.
I'm just letting you know.
Okay.
Okay, moving on. Our broker portal. So if you haven't already been there, you should check out our broker portal. It's pretty good. You can you can pinpoint a quote without even talking to me, just using the portal. You can adjust terms, so you can buy the prepaid down. you can, you can quote all this stuff out while you're on the phone with the borrower. The key thing though is you better make sure it's a good deal for velocity before you start quoting all this stuff out. So normally I don't recommend you play around with our pricing tool until like we've done some deals. Term sheet same day. I used to say same day, but I've gotten too busy. So it's actually term sheet within 24 hours. So how it works, you throw the deal in the portal. You either notify me or I get notified by my system. And then I will issue a term sheet out normally within 24 hours. And see that little broker comment box right here? You need to click on that button and tell me how many points you want to charge. Otherwise, you're going to slow the process down. I'm going to have to call you or email you and wait for your response before I issue a term sheet. So click the broker comment box at the bottom. Tell me how many points you're charging, because I will build your fee into the term sheet. So it looks really fresh. So you can see all the stuff you can adjust. You can adjust the fixed term, and we'll go all the way down to, I think, 5 years on a, even though nobody takes it, it doesn't make any sense to take a shorter term, but people do. People say, well, I want a 15-year. It's like, okay, we'll give them whatever they want, just to get the deal going. Okay. Broker marketing materials. So we have a lot of information. We have flyers, social media launch kit, a lot of the stuff you found in our social media launch kit that I provided through New Finance came from Velocity. Not all of it, but a lot of it. We have a stellar marketing package. So Velocity updates this quite often. You will get a link to that. If you haven't already gotten a link to that, just let me know. I'll give you that link. And then finally, if you haven't already registered with me, if you go to register on the website, you will get directed to a random account executive, and most likely it'll be a new account executive who will be learning with you. You don't want that. You want an account executive that's been around for a while, ideally. And if you haven't registered, you can just QR code this to your cell phone or shoot me an email and I'll get you registered. Anyways, you guys should all be registered because you're in the in crowd. So that's all I got for Velocity, guys. It's a good product. Anybody have any scenarios that we could run? I know we've been running a few. Justin, can you give a testimonial for everybody?
Sure. Which deal? I've done a bunch of deals with Velocity. So
Yeah.
No,
Well, just
Velocity.
tell everybody in comparison to other, maybe a couple of the other guys that we have in our bucket system. I don't see deals coming from most of my people who are in my master class here. So except for you and a couple, one other person, I believe. So.
Well, I mean, I think the theme is that Velocity will do deals that everybody else won't do. And the rates are going to be higher, but it doesn't matter because it's the only place that the client's going to be able to get funding. So, I mean, the two deals that we just did were two residences, but they were doing they were doing senior housing by the room. And no other lenders are going to do that. And Velocity would. So, you're really limited in options. And I think the rates on those were around 10%, but for the borrower, it's 10% or you're not going to do the deal.
Right. How do you sell those borrowers who aren't going to qualify anywhere else, who believe that they should get a lower rate? They want a lower rate. They don't want the 10, 11% rate. What do you normally say to those kinds of borrowers who they're just not going to qualify?
So if I know, I mean, I'm still learning too, but if I know that it's going to be a tough deal, I try to address it up front and set the expectations from the beginning. Like on a deal like that where it's senior living, I'll start saying, hey, look, just so there's not a lot of lenders out there that are going to do this. This is a tougher deal than you think. I know it's a senior family residence, but no lenders are going to want to take on the risk of evicting seniors out of a home because you're not making the payments. And so I try to get them to, I mean, that's the best case scenario, is getting them to understand up front that that rate's going to be up here. And so, it's always better to have the expectation set before you present the term sheet.
How do you prevent them from shopping around after you have beat their hopes down to earth?
Again, it's talking to them more upfront. I've got one today, actually, that is submitted to you. I think I'm going to get a quote from Velocity, and I got one from Silver Hill, actually, and sent them over some pricing. They emailed me back and said, "Hey, I've got a much better deal elsewhere," and I didn't know they were shopping it, and they're looking for a no prepayment product. And so honestly, my vibe is on it that they're going to go down a path with whoever is offering them conventional financing. It's that daycare, John, in California. It's the daycare property.
Yeah.
So I think they're going to end up going down a path with somebody who thinks it's going to be financed as a residence, and it's not. And it's going to get kicked back to me eventually.
Yep.
The
That
lower
is
rate's not going to come through for them.
Yep. That's the story. Those are all really good points. The main thing is setting expectations from the beginning and taking it from a consultative approach. When someone's out there shopping for rate, shopping on their deal, you need to respond. There needs to be a key factors, like things that you address in every single call. First, recap the scenario, making sure that they listened. The next thing is setting proper expectations. And you have to set those expectations so that the thing about setting expectations, when you're setting expectations, they hear that you know what you're talking about, and you're not trying to BS them and say, "Oh yeah, I'll give you whatever you want." You need to just tell them, "Listen, this isn't going to work out for you. I don't care." And you can say, "I don't care who told you that this deal is going to get done at 6%. I'm telling you right now, I do dozens of these, a month or 2 months or a year, and this is not going to work out for you, whatever path you're going down here." I'd love, and you could say, I mean, you can be gentle about it, right? At the same time, but you can ask them, have they underwritten you yet? Like on that last part that you mentioned, they're going to go to this other lender. That's the thing about this space is there's nothing restricting people from issuing term sheets or false advertising on the private money side. People say whatever the hell they want, bait you in, and then get your butt kicked. So I would ask them for that term sheet, who the lender is, ask them if you can give them a call and, get to know the lender a little bit and really, dig down to see if it's going to be a good fit. Most likely they might not want to do that, but sometimes they do. And you could say, no, they'll say no.
I asked.
Those guys did, but I've had people tell me who the last lender was and who who's issuing the terms. And I can say, man, I know for a fact, I broker deals to these guys all the time. They're not going to do it, So digging in and asking questions about where it's going, setting proper expectations from the upfront, and just not being a yes man. It's actually commands a lot of respect from the private money investors, I've noticed. If you're just not a yes man, they want to hear no, they want to hear yes, but it's better to hear no, and not waste time than to hear yes and waste, weeks. So, and a lot of them have already had bad experience with other guys, right? So if you give them that pure, truthful experience, then, they might be willing to share more information. I don't know why these guys, they didn't tell you who the lender was.
No, he wouldn't even give me the rate, which makes me,
that's bullshit. It's a lie. Then he doesn't know.
Exactly, which makes me think that it may not even exist.
Yeah, no, he doesn't know. Yeah. You would say, "Oh yeah, it's with Citizens or whatever." Why not?
Why not? Why not?
Yeah.
Why not have somebody beat it if they can?
Yeah.
If you're a shopper.
Yeah, no, he didn't. He doesn't have anything. He doesn't know.
Yeah. I mean,
We'll
some people aren't shopping, and it's great. You give them the numbers, and here it is, and they're ready to go.
Yep. But yeah, setting those expectations up front, even if you don't really know, just try to set some sort of standards. All right. Cool. Thanks for that information. Justin just killed it on a couple of loans that we closed. Like you said, those senior. Yeah, so.
John, I just registered, but could I just send you over a scenario? Sending over the appraisal, a description, this and that, or have to go through the portal and fill out an
I
application?
prefer you send me email with the scenario.
Okay.
I don't
Me
want
too.
you wasting time in the portal if a deal's not a good fit for us.
Neither do I. Okay.
Yeah.
And Justin, glad you had good luck with Silver Hill because I didn't. Okay.
I thought Silver Hill wasn't lending anymore, so.
Yeah, they're tight. I mean, they have a pretty small box that you got to fit the deal into.
Yep.
But they will do
Does it-
daycare.
Does anybody know who's taking Jay Song's spot? Is Strong Hill still lending or no? I was gonna call them again today, but
Lucas Bull and you're the other guy from
Lucas and Ed.
Newbridge.
So they fired,
Lucas.
they got rid of
Yeah.
people and then brought
CTG.
Lucas and Ed on, brand new people.
Yeah,
Yeah.
Jay is at Civic.
Jay's at Civic now, okay. CV3.
He told me they're different. I asked that. I thought they were the same company.
They are different. It was Civic, then somebody split off. I guess they had some investor issues, and they CV3 started, and these guys kind of put Civic back together, as I understand it. I don't know anything about Civic other than next I asked Savannah about it.
Yeah.
Right on. All right, guys. Well, thank you so much for your time. Thanks for listening about the Velocity product. I don't ever pitch my product on this channel, but hey, I thought it was time. And next week we have a new group coming on. If we check it out real quick, who do we have going on? What was his name? These guys, is it Oak? It's Oakmont. Yeah. We're gonna have that Oakmont guy coming on, last I checked. And we have another one. Yep, Drew Colkin. So thank you so much, Justin. I think it was you. Oakmont hopefully will fill our Strong Hill gap that's been kind of taking place because they're waning back right now. All right, guys. Thank you so much. Hit me up.
Yeah.
Yep. Later. Bye-bye.